Have you been looking for a channel where you can gain insight on where the market is headed, plus learn how to trade? Well, look no further. The name may be derpy, but the analysis is anything but. Come join a growing community of traders that are learning the hidden language of the markets. This is not financial advice. Welcome back, all you cool cats. Today we're going to be going over SPY, QQQ, futures, and so much more. So far, SPY has broken out of this symmetrical triangle pattern or ascending triangle, depending on how you want to look at it. It's hovering above the daily 10-period moving average and getting pretty close to the upper Bollinger Band, which would be around 579 to 580. We've previously covered this giant cup and handle pattern, and the pattern target for that is somewhere around 575 to 576, which, interestingly enough, we're only about a point away from fulfilling that pattern target. SPY could go as high as about 585 before it would actually touch the previous support line of the big rising wedge pattern that we've been covering. And I'm interested to see, are we going to come back and retest the previous resistance line of the symmetrical triangle pattern around 566 to 567 and then blast off to the upper target of this pattern, which would be somewhere around 620? Or was this all one false breakout, and then instead, if we turned around from this point, we would actually expect to see SPY to come somewhere down to around 518, which would create a new higher low. The biggest question is, would that dip get bought up or would it get sold off? When we take a look at the ES futures, we could come all the way up to around 5940 before we touch the previous support line of this big old rising wedge pattern. And the symmetrical triangle pattern on the futures is targeting somewhere around 6230 to 6240 to the upside. But if this turned out to be a false breakout, we would actually expect to see this come back down and retest somewhere around 5250, which of course is a pretty key level. And when we zoom way out and we look at the big cup and handle pattern here, we can see that we've actually already fulfilled that pattern target and went slightly above it. So we have a lot of nested patterns on QQQ, but we can see how even though we broke out of the symmetrical triangle, the second that we came up and we touched the previous support line of this big rising wedge in yellow, we got a sell-off, confirming it as resistance. On top of that, we also touched the upper Bollinger Band here on Thursday, which added confluence to that whole sell-off. If this is just a minor pullback before we complete the pattern target of the symmetrical triangle pattern, we would eventually, over the course of weeks, expect to see a pattern target of somewhere around 550 to the upside. But if instead this was all a false breakout, then we would actually have to move the pattern target for the symmetrical triangle. And when we move that up, we actually see that it lines up almost perfectly with the pattern target of the massive rising wedge pattern, which is going to target somewhere around 420. But let's not forget this cup and handle pattern that's even on QQQ, which is still targeting somewhere around 528 to 530 on QQQ. If the symmetrical triangle pattern plays out to the upside, it would more than fulfill that pattern target. And very similarly to all the rest of the market, /NQ, which is the NASDAQ futures, touched the upper Bollinger Band on the daily time frame on Thursday and rejected sharply. It's currently hovering above the 10-period moving average and could potentially come back down and retest this previous support line somewhere around 19,500, give or take. If this symmetrical triangle pattern plays out to the upside, we would expect an upside target of around 22,600. However, similarly to QQQ, if we drag this pattern target up and this potentially was just a false breakout, then we would expect to see this to come back down somewhere around 17,300 to 400, which again has confluence with the pattern target of this giant rising wedge. What's even more interesting about that to me is that the Ichimoku cloud here, the strongest support for that would be right around that level. And the question I have is, if we do come down to that level, Will we find the buyers that we expect, or will something have happened in the economy that the market can no longer deny and we start a new bear market? If there's anything I've covered so far that didn't make sense, please drop a question in the comments section below and I will try to address it either on the community tab or in my next weekly analysis. And don't forget to subscribe and tap that notification bell so you won't miss those updates. And while you're already down there, please tap the like button, for the algos. Taking a look at Dixie, the dollar strength index on the 4-hour time frame, we have this 4-hour symmetrical triangle, kind of a mini symmetrical triangle that we covered before in purple. And if we assume that this was an initial false breakout like we'd normally see on symmetrical triangles, when we move the pattern target up there, we can see that the Dixie is targeting somewhere around 100 even, which of course is a very key support level. And one of the reasons I love patterns is that they can form just about anywhere. So when we look at the RSI here on the 4-hour time frame, we can also see what is appearing to be a symmetrical triangle on the RSI. So what does that mean? That means that Dixie is about to break out explosively in one or another direction. Now, of course, it's always hard to tell which way something's going to go, but if we use our imagination a little bit and we draw some trend lines, we can actually see that this almost appears to be forming a bit of a basing pattern, kind of a rough falling wedge pattern. If this actually is doing that, this would be targeting somewhere around 103, which would move it above this main resistance line that's been going on for many, many weeks. You can see here. Alternatively, if this ends up being a descending triangle and it breaks to the downside, we would expect it to bring this all the way down somewhere around 98, right around here, which would actually line up with the lower support line of this descending channel. And something you should really keep in the back of your mind is that Shigeru Ishiba is the new Japanese prime minister, and they are primarily interested in rate normalization. And what that means in layman's terms, they're wanting to raise Japanese interest rates. So if that leads to a strong yen and a weak dollar, look out yen carry trade. We could see August 5th play out all over again, and possibly even worse considering we're at an even higher valuation in the overall market. I pointed out in my last video this descending resistance line, and I said if the VIX can get past it, we could potentially see it start to move up. And right now the VIX has to get above this long-running ascending channel somewhere around 1750. It has to break above that to have further continuation to the upside. And of course we can see here in red and in yellow, kind of slash green, this is the Ichimoku cloud resistance. We would have to get above that. So this has confluence with that main resistance. And I love to keep a daily eye on the ADD, the Advancing Issues Declining Issues Difference, the New York Stock Exchange. We can see how we had this bearish divergence play out here. We had a lower high and we had a bit of a higher high, and we saw how the market sold off. Well, then we got on the market, we got a higher low, but we got a lower low here on the RSI. And what's interesting about that, this is called a hidden bullish divergence. What does that mean? It means that the bears were strong enough to bring strength this low so that the bulls had a kind of a snap back reaction. But in my experience, what I see is you have a impulsive move to the upside followed by further sell-off. If you can guess what the overall market strength is, you can kind of guess which way SPY and QQQ are going to go. So here's something I want you to keep in the back of your minds throughout the week. The Fed gave a rate cut of 50 basis points, and the Chinese rolled out unprecedented stimulus. But is it too late? I'm of the firm belief that they both have been behind the curve and the labor market will continue to deteriorate. If I'm right, this initial euphoria will be short-lived, maybe a few months, until the economic data and the earnings continue to show that stimulus isn't going to save the economy. If that's true, the market will have to start pricing in the dreaded R word. If you're looking for more reasons why the overall market went red starting on Thursday, look no further than Nvidia. It's inside of a symmetrical triangle pattern, and on Thursday, it hit the upper resistance line of that pattern, pushed just slightly above it, actually touching the upper Bollinger Band on the 4-hour time frame, and then of course started its pullback. Now, Nvidia could come down and retest this long-running support line somewhere between 115 to 116. It could come even as low as the lower support line of the symmetrical triangle, around 110. And I did point out in my last video that Nvidia was very likely to go up before it went back down. And here's where things get juicy. To the upside, if this breaks out and completes its pattern target of the symmetrical triangle pattern, it's targeting around 170 to the upside. However, if it decides it wants to break to the downside, it's going to fill these two daily gaps from before, and it's going to be targeting somewhere around $70 a share. I think anybody would agree that if Nvidia sells off that much, it's unlikely that the whole rest of the market is just going to rotate into something else and keep itself from crashing. And some people are calling Tesla the new Nvidia. We can see that once we had this initial false breakdown of this smaller symmetrical triangle, when we move the pattern target down here, we can see now that it has actually fulfilled that pattern target somewhere around 262 to 263. So my question now is it going to pull back to this previous resistance line of this much, much larger symmetrical triangle pattern, somewhere around 239 to 240, and then move higher towards its target of around 475? Or, and this is crazy because you have to zoom all the way out to the weekly time frame to see it, but if we take this measured move right here and we move it over to where this has come up to, we can see that we're targeting somewhere around like $28 to $30 a share if this breaks to the downside. And I don't think I have to tell anybody what that would imply for the overall market. It would mean an absolute crash. And taking a look at TLT, like I pointed out in the last video, we had this rising wedge pattern, which was essentially targeting the 50-day moving average here in this kind of this purple, which it hit and then bounced off sharply. I think a lot of people were expecting this to go to the moon once the Fed announced rate cuts, but it did the opposite, indicating that this was likely a sell the news event. Another possibility, and one that is much more concerning, is that the bond market could be sniffing out a ton of quantitative easing brought on by the Fed in the event that we have an economic collapse. In that event, we might see inflation soar. I wasn't able to share this in real time, but when you look on the 4-hour time frame, we have what looks like a small falling wedge pattern, which is targeting somewhere around 99.30, which just so happens to be a key support and or key resistance level, depending on which side of it that you're on. It also has confluence with the Ichimoku clad resistance right around here. That's about the thickest level. And some people might call me crazy for saying it, but there is the possibility that this comes back down and retests all the way around 94, which is kind of a key level. And as you can see, when we have this lower support line that's drawn here, there's, multiple touch points. There is confluence around this $94 price level where we could hit that and then bounce back sharply. TLT has to get above this long-running weekly channel in order to have any further upside. And barring any massive stimulus from the Fed, assuming that they don't have to monetize the government's debt, obviously as rates get cut, TLT will be a long-term positive bullish bet, in my opinion. But of course, this is not financial advice. And without further ado, let's take a look at today's trading rule to live by.